This is an audio recording of the LendIt Fintech Weekly News Show. The show is streamed live on LendIt TV, LinkedIn, YouTube, and Twitter at 5 p.m. Eastern Time every Thursday. In this fast-paced show, the LendIt News team and a special guest discuss the most important fintech news stories of the past week. Good afternoon, everybody, and welcome to the LendIt Fintech Weekly News Show. My name is Peter Renton, Chairman and Co-founder of LendIt Fintech, and I'm joined, as always, by my good friend and colleague, Todd Anderson. How are you doing, Todd?
I'm well, Peter. How are you?
I'm doing great. And our special guest today is Tim Lee from Alchemy. How are you doing, Tim?
I'm doing fantastic, Peter, Todd. Happy New Year.
Happy New Year.
You as well.
Before we get going, just give us a little 30-second intro to Alchemy.
Embedded finance. Every company will be a fintech company. So what we do is very simple. We plug in our software. HubSpot, Salesforce does your CRM. Alchemy does your financing. That's what we are.
All right. Well, let's get going. We're going to kick it off with a couple of big funding rounds. One monster round. Checkout.com raised $1 billion. That is impressive, regardless of, the size of the company. They are really, they've got a valuation now of $40 billion. That's up from $15 billion just 12 months ago. So they've, when they raised $450 million, I mean, they're becoming a machine. They're getting into Stripe-like territory. And I know they do compete somewhat with Stripe, although they're focused, I think, more on the higher, larger enterprise type companies. But really, just a massive funding round.
And they only had to give up 2.5% of equity.
Yeah,
in that round, which is just insane. But yeah, I mean, they do focus more on the enterprise customer. I think it was the CEO said in the piece that they are profitable.
Yeah.
So they're just hoarding cash because they, from what the story says, basically for two reasons. One, to keep hiring. And the other is they're going to make an aggressive push into the U.S. They're primarily, Europe, Middle East, Africa focused. At least that's what they've built the $40 billion business on. And now while I believe they're in the U.S., they'll be pushing into the U.S. More heavily, and as well as, I think arguably the hottest term in, fintech and tech these days, which is Web3. I think they already have 5 or 6 crypto focused clients, so they'll be making a bigger push there. And so it's, to be honest with you, when we first heard of Checkout, I think it was a couple of years ago, it feels like they came out of nowhere.
Right.
And now they're, granted, not as big as Stripe, but I mean, they're quickly rising up the ladder.
Not far off.
Yeah.
Yes. A whole new rail being created in front of our eyes in the past 48 months. You're absolutely right, Todd. This Web 3.0 thing, it's going to be a new infrastructure operating system for Checkout to go and hire a bunch of people to build a transactional rail in that verse, if you will, X-verse. It's a very interesting play. And I think they're going to hire a lot of really crazy people here in the US to get it done.
Yeah, and I think that's what we're going to see. They're going to see the Checkout.com name around a lot more in this country because I think they're based in London. Is that right, Todd? Pretty sure.
Yeah. And, I think the most interesting thing about them is they're kind of the Web 2, Web 3, they're kind of the bridge between the two.
Right.
Which I think is key because I don't think we're, at least anytime in the near future, going to be all Web 3.
Right.
And so it's going to be this constant bridging of the two worlds. What can you use that best suits your business in Web 3? How can you implement blockchain or crypto-based products to complement what you currently do? And someone like Checkout is clearly already established themselves as that bridge, is only kind of going to entrench themselves further there.
Right. Yeah. Well, let's move on. There's another company had a big round. Admittedly, not as large as the checkout.com, but we might not see another one as large as that for a while. Brex raised $300 million at a $12.3 billion valuation. That's up from last April when they raised $425 million at 7.4. So, that's to me is a reasonable increase, and it's. They've said their revenue has more than doubled in the last year, and their valuation has not quite doubled. So that to me is that's not unreasonable. And they've also said that Brex has really made their name for themselves. Really, corporate card for startups, and now they're moving more up market. They're going after the mid market companies and also enterprise type companies. So they're another company. I think we had Enrique on our keynote stage last year, and they clearly are one of the fintech companies to watch.
They're going with their customers into their next phase. So right. They started in the startup, the e-commerce early stage space, and their companies graduated, and they're graduating with them.
Mm-hmm.
And so, I think it's an interesting journey. I mean, every time I read something about Brex, I'm still surprised that they're in their early 20s.
Right.
I mean, it blows my mind that, they're like 23, 24.
Founders,
it's the two founders. Right. It's like, it's amazing. And they took this idea and have now built an almost, on their way to 15, 20, 25 billion, I'm sure in the coming years, pretty rapidly, and got after a space that has since, with the pandemic and everything else, started to radically transform. So it proves that they were early in serving these customers and these companies that needed better options than what traditional lenders and traditional finance firms were giving them, which was pretty much being shut out.
Yeah, exactly. Even some of our clients are I've noticed that they are using Brex's checking accounts and credit card products and things like that. Any self-respecting startup can't just waltz into Wells Fargo and expect them underwrite them and get them a financial product. So I think Brex is interesting. But carrying on this person they hired away from Facebook, 15-year veteran at Microsoft. My God, this guy's going to take it to the next level. I'm not even sure what he's going to build, but it will be interesting.
Yeah, that was also in the announcement of the fundraiser that they've got a
perfect
new
chief for their enterprise strategy.
Yeah, a new chief product officer with a lot of deep experience with enterprise software. So
yeah, it's a good hire.
Interesting. Okay, let's move on. I want to talk about PayPal, because this was in the news earlier this week. There, PayPal, someone dug into the code. It was like a hackathon, and they found this PayPal coin that was the sort of part of PayPal. The PayPal have acknowledged that they're looking at and it's a stable coin. They're looking at it. This to me is really interesting, because when you think about, there's really no other company like PayPal out there, because they've got a massive network, hundreds of millions of customers, tens of millions of merchants in, I don't know how many countries around the world, but probably most of the world has PayPal in as part of their financial infrastructure. And it's, to me, they are a company to watch. And this stable coin could suddenly mean that, like, all of the international remittances that now flow through Western Union and MoneyGram, and Ripple's attacking it, I know, but PayPal's in a great position to be able to attack that market too. So who knows? But we'll probably see a stable coin out of PayPal pretty soon.
I mean, isn't this one of the battles that we're going to see, which is private technology-backed companies issuing stable coins versus governments issuing stable coins. And while technically we can sit here and say, the government controls the money supply and stuff, but like, if you're a young person, who do you have more trust in? The United States government or PayPal?
Right.
Yeah.
I know the government has, essentially broad authority and kind of, the regulatory authority. But when you think of the overall trust in institutions, they're much more apt to go to a PayPal or someone like that has served them well, makes their experience super seamless, versus the clunky U.S. government who knows what the hell they're doing in this space. Now, granted, I know the government will eventually win down the line, but the battle of the private and public stablecoin, to me, is going to be fascinating how it plays out.
Yep. Yeah, we have another article a little bit later in the show that we'll delve into that. But thoughts on PayPal, Tim?
Well, before the Civil War, at least in the United States, every region, every state issued their own currency.
Right.
Remember, some of them were backed by silver dollars, some were just local currency backed by the local government. For PayPal to, should I use the word evade some of these constraints with the U.S. Payment system, they have to create their own currency.
Right.
To compete with the TransferWise of the world.
Well, exactly. And they're a very international company. So I can see how that would make sense. And the one thing I'll say, actually, I'm going to talk about that in the next, when we talk to the next stablecoin article. I want to move on to my favorite topic, overdraft fees. We continue to get more movement here. Now we have 2 more of the big 4 this week announcing, I would say, radical changes to their overdraft. We got Bank of America reducing overdraft fees from $35 to $10. That's going to start in May. They're also eliminating the non-sufficient funds fees that happen when they just basically kick the check back and don't allow it to be paid. That's going to be eliminated starting next month. Wells Fargo is also going to eliminate those fees, and they're going to do. It looks like they're doing a bit like the, I think it's PNC. I think was doing this 24-hour grace period, where where they'll give people notification that they are going to overdraw their account, so give people some time to change. But we've now got pretty much all of the top 10 banks doing something. It seems like on overdraft fees. That's a victory for fintech right there.
Yeah, Chase was, it's up to $50. They won't charge you any fees in terms of overdraft, and most people keep it under $50. It's usually in the $10 to $20 range, I believe. But this is where I think companies like Dave don't get enough credit.
Right.
They're without that. Yeah, maybe we end up where we are, but I don't think we end up where we are with overdrafts and NFC fees. NSF fees, this quickly.
Yeah.
And so I think we're probably still years away from that. Or you're probably closer to a government mandated, forced thing about overdrafts. And this just naturally happened because, there was competition created by Dave and then followed by others. And now you have the banks moving.
I worked on some of these algorithms at one of these top. If you look at my LinkedIn profile, you can figure out which bank it is. Before Dodd-Frank, we were trying to figure out also the algorithms to, increase the revenue on overdraft fees. After Dodd-Frank, we got to sort transactions a certain way to minimize it for folks. Banks were making billions every quarter, and it was sustaining the entire consumer bank. But my biggest fear here, Peter and Todd, is that I think every self-respecting payday lender is rubbing their hands together again, because if the bank cannot extend credit, these poor folks that are overdrawn on their account from time to time will have to go back to the payday lenders again.
Well, that's what's interesting here. Like Wells Fargo, in the article in Banking Dive that I read, Wells Fargo said they're going to launch a short-term credit product up to $500 by the end of 2022. And I think, I'm hoping that I hate payday lenders. I really just can't stand it. But there's so many fintech options out there now. I'm hoping that my goal here has always been to put payday lenders out of business because there's no demand, because there's better options. And I think we're not there yet. We're nowhere near there, but we are making progress. And that's what.
Yeah, hopefully these small dollar loans that these banks come up with is not self-serving. Hey, I'm not going to charge you overdraft fees. I want to charge you a lot of fees for this extended, like overdraft protection product. Well, yet to be seen. But banks, I know this, won't easily give up billions of dollars of revenue for no good reason. But all good on these new banks that are limiting their overdraft fees. Good on them.
Yes, indeed.
The right
Okay.
step.
Moving on to a story which I think is just sort of, it didn't really get a whole lot of play this week. It was actually, it was yesterday, the day before, but this is TransUnion partnering with Spring Labs, and what they're basically going to do is bring credit data into Web3. So this has been a missing piece, that there's no way that the regulators will allow Web3 or decentralized finance to grow much at all, or do everything they can to stop it, because there's no KYC, there's no AML. But what Spring Labs has done with their digital wallet, with their new product, this new partnership they're doing, is you're going from, what the way I understand it is, you can bring your credit information, your identity information into your digital wallet, so that when you are, like I've got a MetaMask wallet, I presume that's what I'll be able to bring this in. Now it won't store the credentials themselves in the wallet. It'll say that I have been verified, and then you'll be able to move around the web in all these DeFi applications, and they'll see, oh, this guy has his credentials verified. So there'll be like two types of users. There'll be verified users and non-verified. And eventually, I think these companies are only going to be able to deal, particularly in the US, with verified users. But this, I think, is a game changer, and I think it really could get regulators on board. And kudos to TransUnion for taking the lead here.
And Spring Labs.
And Spring Labs have been taking the lead for a long time, but they need people like TransUnion to come on board.
Well, yeah, I mean, this is where DeFi and crypto need to go, which is working with certain service providers. Now, you don't need to put everyone's information everywhere. You just need basically a check mark.
Yep.
Like, Peter's been verified, Tim's been verified, Todd's been verified. And it takes out a lot of that worry that regulators have. I think in the article, I think they said it would be live by end of this year.
Yeah.
So, it's still got some time, but this is the type of innovation that puts regulators at ease when you have all the other stuff going on in the space.
Yeah. The flip side is that it kind of destroys one of the central tenets of cryptocurrency, which is the crypto side, anonymity. Good or bad, right? A lot of people don't want government to understand what they're doing on a day-to-day basis. Terrorism, AML, and all that stuff aside, we are already pretty pretty gnarly on the privacy side of the house, and now the government or anybody else wants to really look at how we're transacting, what we're buying. We'll see. But the founder of Spring Labs is the guy that used to build Avant. Smart dudes. If you look at their advisory group or board, it's got all the who's in that fintech space. I think they're going to be just fine for the.
Yeah, but you raise a good point, Tim. I think there is. And there was some of the true the purists in the DeFi Web3 world will scoff at this, but. Be that as it may, like what you don't want to have is regulators saying, okay, if you cannot use any decentralized finance, it's going to be illegal in this country to use a decentralized finance platform. I think if you really want to be a purist, then you need to go move to the Bahamas or somewhere else, because it's just going to be. I mean, it's a
negotiation.
Yeah, we don't live in a black and white world, and
it's essentially a negotiation. It comes down to, if you want to do this, then you have to give up a little bit of this.
Yeah,
and crypto as a community needs to figure out where do we want this to go. If we want wide scale, large adoption, then what are we okay with giving in a little bit on?
Yeah,
because everyone, and regulators are going to have to do the same thing on their side. They're going to have to give in a little bit as well. And because other countries like China and places in Europe will start passing us by, and then regulators will say, all right, where do we have to give in? And so then hopefully it comes to a head where both sides are like, all right, I'm giving a little here. And in the ultimate goal, this will end up where I don't think they're there yet, because I don't think regulators have taken on the task of, hey, we really want to do this. I think the Fed report's coming out soon. Maybe that could provide a little bit of clarity, but ultimately it's a negotiation between markets and participants.
Right. But that's a great partnership.
Yeah,
Yeah.
no, I agree. I think, and I just, as I said, I feel like this is sorely needed, and before it gets too big, this is the sort of thing that we need to get mainstream adoption on. Okay, let's move on. We had our Fed chairman, Jay Powell, testifying before the Senate Finance Committee this week. The one thing that I wanted to highlight about that was the fact that there's two things that the Fed is working on. They are working on a report on stable coins, and they've and that has been long awaited, and the Fed chairman said it's coming. It's a matter of weeks before that report is going to be out. And then the other piece is Project Hamilton, which has been promised since the summer. That's going to be out soon as well. And the one thing that Jay Powell said, which I wanted to highlight here, he says he sees no problem with a privately issued stablecoin coexisting with a CBDC potentially issued by the Fed. That I think is something that people have been waiting to hear, and they got that this week.
And that goes back to our PayPal thing. So who chooses what?
Yeah. I mean, the whole CBDC thing is still obviously completely up in the air, but.
And Peter, it looks like we have a comment here, and so I'll pose this question to you. So, from Hal Gotch, I believe is the last name. So, Hal, thank you for your question. I'll pass this to Peter. Can you comment on the features of a stable coin and how it can be used in payment and money transfer, especially cross-border?
Yeah, so a stable coin is what, as the name suggests, it's something that is usually, all the stable coins right now are pegged to the US dollar. So one stable coin is $1 US. So if you can just imagine, it's like a US dollar. I mean, a lot of this stuff is backed by US treasuries and other very stable types of securities. And it doesn't matter where you live. Your one stable coin is it's worth $1 US. So it's sort of like you can imagine trading in US dollars anywhere. But you don't have to do that intermediary step. You can just go and buy stable coins in your local exchange your local currency for stable coins. Then you can build up your wealth in stable coin, which if you live in certain countries that might have a volatile currency, that's the way to do it. But then moving money across borders, that's what it's all about. You're moving a stable coin, doesn't matter geographically where. You can be in Argentina moving it to Russia. You can be wherever it is. It's just going to be one stable coin moving to around the globe. And so it just takes the local currency piece out of the equation. And I think that's, anyway, that's.
I mean, the question comes down to is whether you do it on PayPal or you do it on the mechanism that the U.S. government creates, or you do it in Figure Pay, or, there'll be an option. You'll have multiple options where you can transact. And as Peter said, you'll get one for one, and then you'll be able to send money and it'll be instantly in a wallet of someone else.
Right.
So long as they're probably on PayPal or in that system. Eventually we get to the point where there'll probably be interoperability between PayPal, the government, and other systems. And then maybe you can send your money wallet to wallet, regardless of the system or payments rails that you're on. But essentially it comes down to there's a mechanism, which is the platform that you're on, and then you'll be able to instantly send money back and forth. There's still a lot of innovation to happen here and how it transmits, but essentially it takes out a lot of the middle piece, like going to a MoneyGram. You don't need to go to a MoneyGram, or going to some other intermediary, a bank that charges you $25 for an international wire that'll send it. And so it eliminates a lot of that intermediary steps.
Yep. Well, while we're on the topic of stable coins, we are going to talk about another news piece that came out this week. This is Mike Cagney's company, Figure. It's the USDF stable coin, and that's operates through the Provenance blockchain. The thing that's interesting here is that they've got a consortium of 5 banks who have said they will adopt this stable coin. And these are not just tiny little banks. These are, four banks in the top 100 of four of the five are in the top 100 banks by assets. And then we just announced today, if you checked your email, Mike Cagney is going to be a keynote. He's going to have a as yet unnamed special guest appearing with him, talking about this. And this is, Figure is a force to be reckoned with, and I feel like they are. What he's doing with payments, I think, is the most interesting. I think it's really the most interesting technology there is in all of payments right now, and all going to be sort of built on this USDF stablecoin.
Yeah, it's a natural extension of what he's already built. He created a whole new operating system for people to transact. USDF are just a natural extension of all the contract he's already built on this platform. Going back to the earlier point about cross-border transactions, it's a thing of a control. The U.S. government didn't write this operating system for people to transact money, so they missed out on this blockchain technology. Right? They're trying to understand it. So if there is going to be a somewhat of a U.S. sanctioned stable coin, it has to be on a rail that they can levy sanctions. We just levy sanctions against, I think, North Korea for testing supersonic missiles, or Russia for doing something in Ukraine. We have leverage there with a good old banking system, but on this new operating system, the U.S. government has no control.
Right.
They're one of the many, they're many to many, not one of the many. Right. So for Jay Powell or anybody else representing the U.S. government that still wants to enforce our influence in the world, it has to be an operating system that we have control over. But right now we don't.
Right. Now that's a whole nother topic that's obviously got political ramifications. But
it's also why it's taking so long in many ways, because and I think, Tim, that's probably your big point, is that they can't just spin something up and say, oh, here it is. They
play it in my sandbox. It's all.
Well, it's not just. Yeah, it's not just foreign. It's more domestic, I think. The government likes to be able to control the money supply, and when you'd have everything, with stable coins, they're not going to have that control. Like, the Jay Powell is trying to keep inflation under control. We can do that with a number of different ways. And one of the tools that they have is controlling the money supply. And that, when he doesn't have that tool, and I don't think he's going to have that tool, even if they, I don't think he's going to have that tool in the future as strongly as what he's had in the past, because of things like this. Anyway, we have had a very crypto-themed show today, and we are going to end with another crypto story, which I thought was just really interesting. A new credit card that is out. Like, you think about the credit card industry, there's every possible type of card you could ever imagine out there right now, but this one is aimed at people who hold crypto. So there's no hard credit check for applicants, but the underwriting is based on your crypto holdings and your other savings and investments. So you don't need to have a really big, thick credit file to get approved for this. It does have, it's for prime consumers. There's a $395 annual fee, so it's not going to be for the subprime. But it's for those people who might have found themselves in crypto wealthy but not having any kind of credit history. Then they can go get their own premium credit card now. Super interesting.
That fee is still going to turn many people off, especially when there's so many credit cards with zero fee, or zero interest, zero this, zero that. Oh, here's a $400 fee. Let me jump towards that one. I mean, just even if you're thinking, just practically speaking, how a consumer looks at something on the screen, 400 or zero, chances are that they jump past it just for that. So I think it's interesting to see if this, I mean, they've raised a lot of money. So conceivably they believe that there's investors at least believe that there's going to be a decent amount of interest in this. And to be honest with you, the whole crypto space, these are people that don't, interact with the system as naturally as, say, me or you. They do things differently. And so this card speaks to them in how they run their financial lives.
In my class that I teach at USC, Southern California, out of my 60, 70 students, I want to say only about 10% of people have awareness of what a credit score is.
Wow.
Everybody else has got a wallet, trading at NFTs, playing crypto games, trading, transacting.
Tells you a lot.
More about exactly. So this is a point for $3.99 a year. They couldn't care less. I mean, they're paying like a couple hundred gas fees to buy NFT art, right? For $3.99, they couldn't care less.
Well, not only that, like the whole thing about fees is, as someone who plays the credit card game, it's all about your rewards. I'll pay $400 if I'm going to get more than $400 in value back.
Right.
And a lot of things like that. That's the thing. They get the rewards. It's the whole crypto rewards thing. They can get a whole lot of cash back on that. So
yeah, that's a good point.
So
this is a bridge between the metaverse, the real world. None of my students can go to Wells Fargo or Bank of America and get a credit card. Don't have credit history or anything like that, right? So with this, they can just ping the wallet and see, you got 200 Ethereum holdings in there. Yeah, I'll give you $500 or $5,000 to spend.
Yep.
It makes perfect sense for that generation of people.
Yep. Yep. So as you say, there's Anthony. Anthony just had that comment that I just put on here that
ego status.
Yes, exactly. There is status that's happening there. Anyway, we are out of time, everybody. Thank you very much for watching or listening. Very much appreciate it. Before we go, quick plug for LendIt Fintech Nexus, our all meetings event happening in Miami, February 7th and 8th. It's going to be fantastic. Can't wait to get down to the beach and just no content, all meetings. It's going to be fun.
And the awards cap it off.
Yes, the awards cap it off. So we'll be back here same time next week. Have a great weekend, everybody.
Awesome. Yeah. Be safe. Stay healthy. Bye.
Yeah.